we've got a first in world history, and that is a huge percentage of people, well over 30% of the American workforce, now can work from home or work remotely full time. And then a large slice can and does work remotely part time.
Welcome to the Commercial Real Estate Academy podcast, the podcast dedicated to simplifying the commercial real estate industry for the masses. Each week, we sit down with industry experts to dissect the many facets of commercial real estate and extract valuable lessons you can apply to your business. Whether you're a new or seasoned business owner or investor, the Commercial Real Estate Academy podcast will be your go-to resource for all your commercial real estate needs. Now, here are your hosts, Raphael Collazo and Jeff Walston.
Welcome to the Commercial Real Estate Academy podcast. I'm your host, Raphael Collazo. Unfortunately, my guest, our co-host, is not going to be able to make it today, Jeff Walston. But we're really excited today to host Paul Moore, the founder of Wellings Capital. I've seen him online for quite some time. I followed a few of his videos as well. So he does provide a wealth of knowledge pertaining to commercial real estate. And I'm really excited to kind of dive into his backstory and then learn a little bit more about what they're doing on day-to-day. So, Paul, welcome.
Hey, it's great to be here. Thanks, Raphael.
Absolutely. No, we're excited to have you. So what we typically do when we first get started with the podcast is we like to learn a little bit more about the person that's across the table from us. So if you don't mind kind of sharing your backstory, I think that'd be awesome.
Yeah, absolutely. So I had an engineering degree, then an MBA, went to Ford Motor Company, and I realized when the first couple of years there that I was not cut out for a big corporation. So I left, started a company with my friend. We were able to amazingly sell it for within about 5 years to a publicly traded company. And so I thought, hey, I'm an investor now. This is going to be great. I found out, you know what? I wasn't a full-time investor. I was a full-time speculator. I didn't know the difference. And so I started investing in all kinds of things I knew nothing about. And I lost a lot of money. Now, I made money along the way as well, but I didn't know the difference. You know, investing is when your principal is somewhat safe and you've got a chance to make a return. Speculating is when your principal is not at all safe and you've got a chance to make a return. And I didn't know the difference. And I actually thought that I should get the same fun and charge and excitement out of investing that I had, from being an entrepreneur. And that was just not the case. Paul Samuelson is the first Nobel Peace Prize winner in economics from the US. And Paul said, investing should be boring. It should be like watching grass grow or watching paint dry. If you want excitement, he said, take $800 and go to Las Vegas. So I didn't know that. And so I spent a lot of years, making money, then losing money. I finally went after flipping 60 houses and a whole bunch of waterfront lots at a resort and doing some other things. I eventually got into commercial real estate like 13 years ago, and I've been in that since then. I've written a couple books one on multifamily, one on self-storage. We've created 6 funds over the years, and our current fund has a wide variety of commercial real estate asset types under one roof. So people can invest with us and get access to all these different asset types. But we're not the operator. We are a fund manager. So that brings us up to today.
That's amazing. Yeah. And welcome, fellow engineer. Yeah. I was industrial engineer in college and then got into the software development space. So I did that for about 5 years before jumping into commercial brokerage. And I've been doing that for a couple of years. So yeah. It seems like that, the engineering mindset does lend itself well to, the brokerage and other verticals within the commercial real estate industry as well. So yeah, I think it lends itself to it very nicely. So one thing I'm kind of curious about, you kind of mentioned how you got into the flipping side of things. You flipped, a lot of homes and waterfront lots. I'm assuming you created, value there. Why commercial real estate? Because that's obviously, one of the things that I think a lot of people that I've talked to in both in the residential community and the commercial community is that sometimes people think that they have to start somewhere, whether it's just getting into the residential space and flipping or whatever else. But, why did you decide to transition to do that?
Yeah. So, one answer is, of course, scale. I felt like I was making a paycheck when we flipped a house, but investing in commercial real estate, for me at least, was a move toward creating true wealth. I consider true wealth having assets that throw off cash flow, and commercial real estate does that. I mean, single family rentals can do that for sure, but commercial real estate can do that at a scale that you wouldn't see under residential. Another thing I love about commercial real estate is residential real estate, as almost everyone knows, is the price is based on comps, comparables. So if I bought a $200,000 house and I added $300,000 worth of improvements, built the basement out and built fences and additions and finished the attic and gutted the whole thing. If I had $500,000 in that house, but it was a $250,000 neighborhood, I might not get my money out of that. But commercial real estate's entirely different. It's based on math for you engineers. It's based on the math, and the math is that value formula, of course, which is the value of the property is the net operating income divided by the cap rate. And so because of that, in commercial real estate, you can somewhat predictably drive or force appreciation by increasing the net operating income. And it's even better if you can catch the cap rate going in the right direction. But at least at my company, we don't rely on the cap rate going one direction or another. We're really focused on that top line, that NOI, and net operating income. And so that's some of the reasons I love commercial real estate.
That's awesome. No, and so I guess to that point, I think one of the things that I'm sure people are curious about is when you dove into that space. Can you talk a little bit about some of the early struggles that you faced as you were looking at some of these opportunities and ultimately, begin investing in commercial properties?
Yeah, well, after being in multifamily for a few years, I actually went back and got a paid coach, and I learned a whole lot more than I had just from doing it, from scratch. And I ended up being able to write a book that was humbly called The Perfect Investment. And that was about multifamily investing. But no sooner had I put that book out there and started blogging and doing videos on BiggerPockets and other things, that I actually started concluding that the perfect investment wasn't perfect if you have to overpay to get it. And that's where we found ourselves. We found that a lot of people, a lot of competitors were overpaying somewhat significantly to buy commercial real estate. And furthermore, they were taking floating rate debt. They were doing short time frames. They were counting on the cap rate. They wouldn't have admitted it, but they were counting on cap rate compression. They were counting on the market to get their returns. And so we were having to compete with them. And we were a multifamily syndication company. And so we found out, we just conclude, I mean, I'm in my 50s, and I concluded, I didn't want to overpay, and I definitely didn't want to overpay with investors' money. And so we were just hitting a brick wall. Plus, we didn't have great broker relationships. Our acquisition team was not seasoned in this. And so we had a lot of challenges. And that was when we decided, it would be better to be diversified. And furthermore, maybe it'd be better to be diversified across not just multiple multifamily projects, but perhaps with some different asset types and different operators. And so that's when we stepped back and retooled. And that's what we do today.
That's amazing. Yeah, and you kind of alluded to some of the concerns that I have, especially in this current environment where you're starting to see fluctuations in interest rates. There's been a lot of speculation. You saw, in Houston, there was an announcement regarding, a syndicator that had over leveraged, and I think they had to give back 3,200 units as a result of that. So, I mean, and to say, who's to know what's going to happen over the next few years, but you're right. I mean, I think having the understanding of what you're getting into before and being very conservative when it comes to that, I'm sure has served you guys well. And that kind of leads us to the next question, which is, obviously your decision to start, a fund, the Wellings Capital. It seems like you guys have opened several funds to be able to invest in these different opportunities. Like, I guess, and maybe you can clarify this for me so I understand as well. So is there differences between the fund and then syndication, or how do you approach that typically?
Yeah, so my compliance people won't let me talk about too much here, but
Sure,
I
I
can
understand.
say that yeah, this is our funds are for accredited investors, and honestly, I was really having a hard time getting my mind around a fund for years. One of my partners wanted to do a fund, and I realized finally the light went off for me that it was the fund is basically a portfolio of syndications, and so it's really just a big syndication where investors get diversification across multiple properties at least, and in some cases different asset types and other things as well. And so, yeah, I mean, honestly, if you're familiar with syndication, it's similar to a fund model.
That's amazing. Okay. And that's just one thing I was curious about clarifying for the audience as well.
Yeah.
So I appreciate you doing that. And one thing I'm curious about, I know we talked about it offline a little bit, is, obviously over time you've invested in a variety of different property types, including multifamily, self-storage, and RV parks. And that's one thing that I don't think we've had, to be quite frank, anyone on the podcast talk about. So if we can kind of dive into that, I think that'd be kind of cool. So if you could kind of elaborate, maybe, how do you look at some of these opportunities, and what are some of the things that investors need to consider prior to even looking in this route?
Yeah, anybody who's looked around, I can look out this window and see a huge Winnebago from one neighbor here that wasn't there 2 years ago, and then the other direction, I can see a pull-behind camper that wasn't there 2 or 3 years ago. The RV space has exploded since COVID. It had already gone up 62% from 2001 to 2021. So in those 2 decades, but COVID, of course, there was a lot of uncertainty at first, but it drove a whole lot of people to camping. I mean, think about it. People didn't want to get on airplanes, or they couldn't. People didn't even really want to go to hotels in 2020, but they did want to get out. A lot of them weren't working or were working remotely. And they realized, hey, an RV and camping thing could be a good solution for this. Another thing that happened during COVID is people started to take stock of their life and where they were spending their time and their family. And they realized, hey, I really want to take more time with my family. And so what happened is during 2020, there were 5 times the rate of the previous record new campers in 2020. So in other words, the people RV camping were at 5x 2019 in 2020. And that was a year that was partially shut down. And then it just went up from there from 2021 to 22. And what we found is that a lot of people want to buy an RV now. There's about 11.5 million RVs in the US, but about 9 million more people say they want to buy one soon. And so it's pretty incredible. RV camping has done well in bad times and good times. Actually, one thing that is in their favor is there are studies showing that RV camping is 47% less expensive than a similar car hotel vacation, and 62% less expensive than a comparable air hotel vacation. And so we've got all that going on. But then, as I alluded to a minute ago, we've got a first in world history. And that is a huge percentage of people, well over 30% of the American workforce, now can work from home or work remotely full time. And then a large slice can and does work remotely part-time. And so this, combined with all the other factors we just talked about, has just caused a huge increase in pressure on RV park sites. In fact, the guy with the Winnebago over here says he has to reserve a year in advance sometimes, which is probably frustrating. So RV park camping has just exploded. Like I said, almost 70 or 80% of the people, as many have one, want to buy one soon. They can't even produce that many. The maximum production, 650,000 a year. And so there's got to be other solutions for a lot of these people. And there are. We'll get back to that in a minute, but I'll take a breath and see what
Oh, for sure. No, I appreciate your feedback on that. And it does seem that, I have a lot of friends that since COVID have looked into buying one. And one of my friends actually bought his before COVID, and he was looking at the price of it during that period of time, and it skyrocketed. I mean, he was like absolutely shocked with what he could have been able to get it for. He ended up keeping it because he does do a lot of traveling, but it is pretty miraculous or pretty incredible to see, you know, the demand for something like that. As far as the park itself is concerned, from an investment standpoint, are you just buying, I guess, what comprises an RV park? You know, how, if you could describe that, I'm kind of interested to hear, because obviously, you know, it's definitely not like a multifamily property where the operating expenses incorporate, you know, other things like roofing and structure. How exactly does that, how does it lay it out?
Yeah. So when we invest in RV parks, just like mobile home parks, our preference is to invest in dirt and infrastructure and lease that to tenants, whether it's for a 3-day weekend or for 30 years with a mobile home park for the most part. But the RV parks, that we've identified 4 types of parks. The first one is overnight, and that's generally along a thoroughfare. You're going somewhere and you just need to pull off for the night. It's light on amenities and it's heavy on convenience. The second type is the opposite extreme. It's extended stay. This is where people set up. They might even take the wheels off and they set up a deck and a little porch, and they might even put a shed in, and they're leasing that spot for years, maybe even for decades. And these are often in the mountains or, you know, at a waterfront resort. A third sort of obscure type is a workforce housing. The 2 types of workforce housing include, like in North Dakota, when we were doing oil investing and multifamily there about 12 years ago, there were RV parks for the workers in the Bakken oil boom. But another type is the fact that there are people who can't afford to live in even in a home or an apartment or even a mobile home. In some cases, some of them have RVs and they are living in their RVs now. It's another type of workforce housing. The fourth type is destination. And there are 2 types of destination RV parks. One would be it's at a destination, like it's right by the Grand Canyon or Zion National Park, or, you know, someplace like Gatlinburg, Tennessee, or it is a destination, and it could be by a destination and be a destination as well. And that's my very favorite. But a park like that might have, you know, like a $600,000 swimming lake added to the park. Let's say let's say the RV park's acquired for a few $1 million. They add on a swimming lake. They might add a fishing lake. They might add, you know, dog parks. They might add cabins. They have t-shirt painting, face painting, hay rides, a drive-in movie theater, putt-putt golf, rental golf carts, and Whibbits. So all these things are value adds for RV parks. And I said Whibbits that way because nobody hardly knows what it is. But Whibbits is a floating obstacle course that the RV park owner might pick up for $200,000 to $300,000 installed on the lake, but they can lease it out for $17 per person per hour. And in the high season, that can be $1,000 an hour they're bringing in from that value add. So destination parks is the fourth type. They're very, very management intensive, but they can be very profitable.
That's amazing. No, and so you kind of highlighted some of the value add opportunities in that space. Could you kind of explain, I guess, and you operate in those 4 verticals, is that correct? Or are you kind of leaning more towards one versus another? Or?
Well, we're open to investing in any of the 4 types. So far, we have been investing in the destination parks, so I know a little more about that.
Sure. And I don't know if you're willing to share, you know, not necessarily specific to investments that you've made per se, but, you know, so what are some of the value add opportunities that you know, as you're looking at these different like properties that come across your desk, like, you know, what wheels are turning in your head saying, okay, these are the potential value add opportunities that could be worth pursuing?
Yeah, we could spend a good bit of time on that. So we like to see these near population centers. So they might be out in the sticks, like, for example, somewhere in the middle of Alabama, but it might be 2 hours from Atlanta, 2 hours from, you know, other major cities. We like to see an opportunity to add a fishing pond, swimming lake, the Wibbits, like I mentioned. We like to see the opportunity for expansion. Sometimes these rural locations have a lot of land that's relatively inexpensive nearby, like around it. So sometimes, you could see a park developer going in and buying a park and then tripling the size of it. We'd like to see it have good cell phone reception for those people who want to work there. We would definitely like to see them add really good internet. They might have, like I said, they might have a sort of a drive-in, one of those screens where they can show movies. I don't want to call it a drive-in theater, but they have human foosball. They have, the golf carts alone can rent for like $75 per cart per day, which is a really nice value add. And there's a whole lot more. Just imagine an RV park that has the amusements, has the location and the beauty of somewhere in a rural area like the mountains of Tennessee, for example, but it has some of the attractions for kids that an amusement park would have, and the parents can sit on their deck or right there on their in front of their RV and work, and their kids can be playing putt-putt golf 30 yards away or swimming around the corner. So it's really it's a really cool time to be in the RV park world, I think.
That's amazing. No, and I appreciate you sharing that. And I think you're right. I mean, I'm sure in each property type, there's unique ways to be able to identify these types of value add opportunities. So I'm glad that you were able to kind of share that. As far as the future of the RV park space, we kind of alluded to it a little bit regarding, people's interest in potentially acquiring an RV and be able to travel around. As far as the camping space, what do you see? You mentioned that this particular opportunity could very well be, somewhat impervious, not necessarily impervious, but at least it's sheltered by some of the economic waves that we're seeing. Could you kind of elaborate as to why that would be the case?
Yeah. So I think one reason is the Airbnb model. And it's also known as, of course, the sharing economy. Now, one of your previous guests who gave me permission to share this, Whitney Elkins Hutton, she actually bought an RV in Colorado and she leased it out for 6 months last year. And I believe she netted in just 6 months half the cost of that RV in just the first 6 months when I talked to her. And so there's a great opportunity if you want to buy an RV, but you hate to see it sitting in your side yard for 50 weeks a year. Well, you can lease them out. But that provides a huge benefit to RV park investors. Here's why. Because if, with thousands and maybe tens of thousands of RVs out there that are sitting, idle 49 or 50 weeks a year, now they've turned into rolling rental units. And so somebody like me who doesn't want to own an RV would actually be able to rent one. I could choose the one I want to rent. I could even choose where I want to pick it up. If I want to go to Gatlinburg, Tennessee, I might not want to drive it 6 hours. I might want to lease it from an hour away from there, or I can even have it set up there. Now, my wife, of course, I'm all game, to set it up. But my wife thinks that it's probably not the best idea for me since I don't know how to tighten my own doorknob. Don't tell her I actually do. But at any rate, you can actually get these RVs set up on site, and you can get, they can deal with the maintenance, the cleaning, all the sewage hookups, all that yucky stuff. They'll take care of that for you, and you can just show up in your car, or you can lease it, like I said, from somewhere closer, and you can drive it there. You can lease all types of different RVs. And all this is to say it's putting incredible pressure on the existing RV parks. Think about it. If tens of thousands, for example, of RVs, I think it's more than that, but I don't want to say that it is. I'm not sure. But if you go to outdoorsy.com or rvshare.com, they'll tell you how many they have on there. You can figure it out. But think about these thousands of RVs are now looking for a space to lease. And there's only so many spaces out there. That doesn't mean they won't build more. I'm sure they will. But I think the future is bright because this RV sharing model, plus the fact that 9 million people in surveys say they want to buy an RV, plus the fact that it's just the trend right now. So I think, the future looks bright. Now, I've tried to encourage my son, who has a lot of land in this area, to consider doing an RV park. But, his point was, well, yeah, but it could have like 5 more pop up near it. And so that makes me, and he's right, by the way, just like self-storage. That's one of the big risks of investing in self-storage. A new one can pop up down the street. Well, the answer to that is one of these destination parks. I mean, by building and managing one of these destination parks, you're creating incredible barriers to entry for competition. I mean, not a lot of people are going to want to, build and manage one of these very management intensive RV parks, the destination parks, that is. So I think the future for them is maybe even brighter.
That's amazing. Yeah. And you kind of alluded to it, obviously this is very management intensive. So you're really operating a business like you would in the Airbnb right. space. You're turning over units and whatever else. Like from an RV park perspective, you're going to be you could probably have management on site. I'd imagine you're probably having a lot of other people that make sure the function of the park is operating like as intended. And you build that reputation right. so that people know that, oh, this is a great place to be able to go. They tell their family, friends, and everything else. And I think from a travel perspective, I think they're going to start seeing a lot. We're already seeing a lot of more domestic travel, but I think more so than going even international with pricing and everything going through the roof, it's just going to become a lot more economical to travel domestically. So I feel like that's probably a good indication of the future benefits of
it's absolutely true. And you know what shocked me, Raphael? And that is, I don't know why I thought this, but I thought RVs must get gas mileage like in the 3 to 5 mile per hour range, but that's not true at all. My Toyota Sequoia gets worse gas mileage than half of the RVs on the road. My Toyota Sequoia gets 12 to 17 and a half miles per gallon in the city and the highway. But listen to this, Class A motorhomes, they get 7 to 13 miles per gallon. That's the worst. Class B, 18 to 25 miles per gallon, much better than my Toyota. And Class C, 14 to 18 miles per gallon, which is better than my Toyota Sequoia. So, honestly, lots of things really favor this space. And like you said, the cost of the trip is just one of them.
Definitely. Well, no, I appreciate you sharing that regarding, the insights pertaining to, the RV parks. Because like I said, we haven't really had anyone on the podcast to talk about it. So I do appreciate you being willing to do that. So one thing I really want to ask you, one of the near the end point of our podcast, we typically like to ask our guests, what is one of the most impactful books they've ever read? And obviously, as you being an author, you probably have read many, many books, and there's probably been a lot of inspiration that you've had over time that has, created your decision-making framework. So I was kind of curious if you could share maybe one or two that was the most impactful. And it doesn't have to be real estate related. We've had a lot of people share books that aren't even close to real estate related or business related. So whatever you feel is most impactful.
Yeah. One I will tell you is called The One Thing by Gary Keller and Jay Papasan. Everybody knows about it, but I'll tell you, early on in this show, I mentioned that I was a shiny object chaser. I was an entrepreneurial investor. I was actually a speculator. And a lot of that came into focus when I read and reread The One Thing, because it reminded me that, hey, I can't chase 3 rabbits because I'll probably catch none. I can't chase all these different things at once. It would be better to be boring, like I said earlier, and do one thing over and over and over really well. And so The One Thing taught me that. Another person that taught me that is my mentor, Barry Farah. Barry ran for governor of Colorado about 5 years ago. Barry rubbed shoulders with all kinds of people in that quest. And he said, those people aren't that much smarter than us, those billionaires. They're not that much smarter. They don't have that much better education. They just stayed with one thing and focused on it really, really well for decades. And that's how they got success. And so that's really my advice, my takeaway. I think, is that people would consider really focusing and even allowing the monotony to set in. That's when you often get really, really good at something.
Absolutely. No, I couldn't agree more. I mean, it's the daily tasks that you do on a day to day that move you the needle in life. And even, as you mentioned, focusing on one thing that allows momentum to build, because if you're focusing on 14 different things and you do one thing here, one thing there, one thing there, you're spreading yourself so thin that you're really not providing as much dedication and value towards one thing that you need to be able to do. So that's a great book. Right. I really appreciate you sharing that with the audience. So
absolutely.
But first off, thank you so much for stopping by. Really, we really appreciate your time. And like I said at the beginning of the podcast, I've watched a lot of your stuff, for on YouTube. That you and several other people that I watched even before I started my YouTube channel. I mean, so I've followed your journey for many years, and I appreciate all the value that you've provided to the industry when it comes to investing and really just providing great advice for people in the space. So
thank you.
We do appreciate that. So one thing I'm kind of curious about is we have this thing called the Commercial Real Estate Treasure Chest. It's a repository of resources that we make available to our audience, and typically our guests contribute something like a helpful PDF or spreadsheet or really whatever they think would be of value to the audience. So if you could share, if you're willing to share something, I'd love to give you the opportunity to share it.
Yeah, absolutely. Well, I can't share my book, Storing Up Profits, because my publisher won't let me do that, but I can share an RV park special report that we wrote. It's about 30 pages, and it's got all kinds of details, graphs, pictures, statistics, and gives people an idea of several ways that you can build your wealth by investing in RV parks. The place to get that is my website, Wellings Capital. That's WELLINGS, wellingscapital.com/resources.
That's amazing. Yeah, and we'll include that in the treasure chest as well, so you guys will be able to access it through there. And we appreciate you being willing to share that. I'm sure there's gonna be a lot of people who gain value from being able to access that information. So thank you for that. So
yeah, absolutely.
No, of course. So Paul, if people wanted to learn more about you, potentially get in contact, maybe they're accredited investors or whatever else, it doesn't really matter. But if they're interested in potentially learning more about what you do, what's the best way to get in touch?
Yeah, you can just come to my website, wellingscapital.com, and just put it in an information request there, and we'll jump on a call, and hopefully I'll be able to help out in any way I can.
That's amazing. Well, thanks for your willingness to do that. We'll go ahead and include that in the show notes. So if you guys are watching this on YouTube, go ahead in the description. If you guys are listening to this in a podcast format, do that as well. So again, right. Paul, thank you so much for your time. We do greatly appreciate it. For those of you guys who are listening to this in a podcast format, we would greatly appreciate if you could leave a 5-star review. It's made a huge impact on our ability to reach a broader audience, and we've seen a significant uptick in our downloads as a result. Along with that, if you guys are watching this on YouTube, we'd greatly appreciate it if you can like and subscribe. It makes a huge impact in our ability to reach a broader audience. And again, we've seen a lot of video views and increase in our subscribership as a result. So thanks again so much for tuning in, and we'll see you all next time.